Depreciation is one of the most powerful tools you can use to lower your tax bill, but most people aren't aware of how it works or how to maximize it. In this video, we're going to dive into how depreciation can save you money and help you keep more of your hard-earned income. By the end of this video, you'll know exactly how depreciation works, how to take advantage of it, and why it could be one of the most important tools for reducing your tax liability. Now, before we dive into the details, if you're looking for a way to protect your wealth in the long term, especially as you approach retirement, make sure to click the first link in the description for a free gold IRA guide. Thousands of Americans are using gold IRAs to safeguard their savings from inflation and market volatility. If you're serious about protecting your wealth over the next 2 weeks, that free guide is the perfect place to start. All right, back to depreciation. Depreciation is essentially an accounting method that allows you to deduct the cost of an asset over time. This can include anything from real estate to machinery, vehicles, or even computers. Instead of writing off the full cost of an asset in 1 year, you can spread it out over several years, which reduces your taxable income each year. Now, you might be asking, how does this help me lower my tax bill? Well, when you deduct depreciation from your taxable income, you're effectively reducing the amount of money the IRS considers to be your income. This can lead to substantial tax savings, especially for business owners or investors who have assets that lose value over time. For example, if you own rental property, you can depreciate the property over a period of 27.5 years. The IRS allows you to take a deduction each year for the property's depreciation, even though the property may be increasing in value. This means you can lower your taxable income year after year without selling the property or actually losing any cash. If you're a business owner, this works for equipment, machinery, or anything else your business owns. By depreciating these assets, you reduce your taxable income, which means you pay less in taxes. It's an incredible strategy for both short-term and long-term savings. But here's the thing. Depreciation isn't just a tool for business owners. Even if you're a retiree with rental properties or other income-producing assets, you can use depreciation to reduce your tax burden. Many American retirees are already taking advantage of depreciation strategies to keep their tax bills low and their cash flow strong. But here's a key point to remember. If you're not careful, you can face something called recapture tax when you sell the asset. Recapture tax is when the IRS taxes the depreciation deductions you've already taken as ordinary income when you sell the asset. This can be a big hit to your financial plans, so it's important to consult with a tax professional to make sure you're accounting for this in your long-term strategy. Another thing to keep in mind is that depreciation isn't just about physical assets. Certain intangible assets, like patents, trademarks, or even leasehold improvements, can also be depreciated. This is a strategy that's often overlooked by many people, but if you're invested in these types of assets, you could be leaving money on the table if you're not taking advantage of depreciation deductions. Now, let's quickly touch on how this compares to a gold IRA. While depreciation is an incredible tool for tax savings, it's important to note that it doesn't offer the same level of protection against inflation and market uncertainty as a gold IRA. Gold IRAs are becoming increasingly popular among retirees for their ability to safeguard wealth against economic fluctuations. By rolling over part of your IRA or 401k into a gold IRA, you're adding a layer of security that can protect your savings, especially as the value of the dollar continues to fluctuate. If you're ready to start leveraging these strategies to keep more money in your pocket, don't forget to check out the first link in the description for your free gold IRA guide. It's tailored specifically for American retirees who want to protect their savings while minimizing their tax burden. If you have $100K or more in your IRA or 401k, or even $5 in savings, this guide is perfect for you. So, to wrap up, depreciation is a tax-saving tool that can help lower your taxable income, especially if you own assets that lose value over time. Whether you're a business owner, investor, or retiree, using depreciation effectively can reduce your tax bill and free up more cash flow for you to invest or use however you like. Just make sure you're also considering how to protect your wealth from inflation and market uncertainty with something like a gold IRA. Again, if you want to learn more, click that first link in the description for your free gold IRA guide. Thanks for watching, and make sure to check out more videos on how to protect and grow your wealth, especially in retirement.